Good day, Millionaire Masterclass attendees. This is Graham Bibby here, calling from my office in beautiful Paradise Island of Phuket. Missing you all already. I thought I'd just give you a little quick update into what's happening in the world of wealth creation and stocks that are outperforming. Before you now, you see what is called a Camtasia. You'll see a little arrow floating around here. And once you join the Insiders Club, you will get one of these every week in more depth than today. But all I wanted to do today was to show you what's happening with the US stock market and to show you three of the stocks that are hitting new highs in our portfolios. So first of all, we have the US stock market here called the S&P 500 Standards and Poor's, and then we have a chart here to the right. This, where the circle is here, this is called a bottom. That's where the market starts falling and starts to rise. And then here we've got another bottom here which is higher, so that's indicating the likelihood of an uptrend. And then the last time it sold off here, where the arrow is, that's higher again. That's again indicating an uptrend. Now at the top here, from this point, we have another line going across, meeting across at these points, which is resistance. And really the market was moving up between these 2 points, and recently it broke up through that point, came back to find support. So normally if you attempt to break through a level 3 times, on the 4th attempt you succeed, and then once you break through resistance, you normally correct back, and here it becomes support. So that's quite good for the market. So that's all very well, but I just wanted to show you some of the things we're looking at. Oh, maybe I'll just flip back again. The S&P 500, as I told you before, it's trading at 10 times forward earnings. That means the average company in here is looking to grow its earnings 10% per annum over the next 3 to 5 years. And the price that people pay for that is called a PE ratio, price to earnings, and that is 15 on average. So it's a 50% premium to that earnings growth. But I'm not looking for the average. I'm looking for the outperformance. I'm looking for the companies that are growing in excess of normally 15% per annum, which is a 50% outperformance of the market, and some as high as 30% to 35% per annum. And I'm not looking to pay a premium to the price earnings, the PE ratio. I'm looking for a discount. And that's why I'm going to take you over here to show you just three of the stocks in that criteria. Now, Actavis is in the pharmaceutical and drug sector. We can go way back to 2012, and you might remember from my presentation, when the earnings start to accelerate, the earnings growth accelerates, that often is reflected in the stock accelerating. And although stocks could already rise 100, 200%, just like with Cisco, it doesn't mean it's all over, because Cisco rose 400% over a few years and then went on to rise 75,000%. Now, I've discovered all of this when, thanks to Darren Stevens, I was writing my book, How to Really Trade the Stock Market. And then when I got into that book and almost wrote it, I thought, hello, I've got to write about master your mind first. And when I really discovered this approach, it was an aha moment for me. So it's really been going since June of last year, and we're up circa somewhere around 40% in that time frame. But I'm looking to get into these stocks at an earlier stage. So this just shows you the trend since 2012, and we've had an upward movement followed by sideways, upwards, sideways, and then the stock really started to accelerate here up this trend line, and last night the stock was up 2.27%. So the S&P itself is hardly up at all, but this stock is still rising 2.27. Now, I told you I look at 20 sectors, so we diversify. Now, this might surprise some of you. This is an airline stock. Most of you would have heard of the US airline Delta Airline. Years and years ago, several times it's been near bankruptcy, but right now, this stock is this company has 21.9% earnings growth and a PE ratio of only 9. So whereas the market's a 50% premium, this is more than a 60% discount. In fact, what we call the PEG ratio, the PE to growth ratio, is 0.41 when the S&P is 1.5. This stock is so cheap. And as you can see, this uptrend's been going very nicely since the end of last year. And now we've got a bit of an acceleration from here to the upside. And last night it was up 2.16% when the market wasn't doing anything. Just to show you one more diversification, this is SanDisk. It's in the data storage devices. It does the USB stick. This stock is just started on the move. It's broken out of this sideways range and has actually just signaled a buy for me now. It's been on my watch list for a little while. I'm not going to buy it when it's doing all of this, and it wasn't on my watch list here. So now it's just given a buy. It was up 1.32% last night. So this is really strong against a market that's basically flat. Its earnings growth of 17.6% consensus forecast for the next 3 to 5 years, and it's trading at 13 times PE. So that means its PEG ratio is 0.75. That means it's 50% cheaper than the market with much superior growth, almost 70% more earnings growth. So anyway, that's just a little bit of an insight for the Millionaire Masterclass, people. Missing you all. I'm looking forward to as many of you as possible joining the Insiders Club, which will focus on these companies that are undervalued with strong earnings growth for now, and then I'm going to let you into more inside secrets as our relationship develops. I'm wishing you all a fantastic day. I did send you an email recently, looking forward to your responses, and I believe most of you are going to be joining the Insiders Club, so I look forward to developing that also in Australia. So from Graham, on a sunny Phuket morning in Phuket, have an amazing week. Bye-bye.